Press the bell icon on the YouTube app and never miss another update.
Friends, welcome to another video on your channel Profit in Equities. Now, if you are benefited by our content, please don't forget to press the like button and also subscribe and comment on our channel so that we reach more people going forward. Now, CLSA is an investment bank focused on institutional brokerage, corporate finance and asset management for corporate and institutional clients across the world. Here, we present 9 stocks that they believe will be wealth creators in the year 2018. Please watch this video to know more. First company on the list is Goldrich Properties Limited, which is available at 725.25, and CLSA here sees a target of 873. Now, Goldrich Properties Limited is a real estate company and this is engaged in construction and real estate development. The company focuses on developing residential, commercial and township projects spread across approximately 11.89 million square meters in over 10 cities. Now, if you were to look at the one-year chart for the company, you would see that it's a consistent uptrend and a lot of wealth has been created here. Now, the market cap of the company is 15,700 crores, which means that the company is a mid-cap one. The EPS is 7.11, which translates into a very expensive price to earnings ratio of 102. Now, the industry PE here is 44.78, which makes the company insanely expensive. The book value is 89.82, which translates into a price to book ratio of 8.07. The return on equity is 0.1061. The dividend yield here is 0 and the promoter holding, although, is pretty good at 74.88. Now, CLSA thinks that this company is going to be a beneficiary of RERA and this is going to go ahead and drive sector consolidation. They are also expecting a strong 50% earnings CAGR over the year FY18 to FY20. Now, this target price of 873 implies a very good upside. Now, the second company on the list is Crompton Greaves Consumer Electricals Limited. Now, this company manufactures and markets a range of consumer products. The company's main product services includes lighting products, luminaries and light sources, and electrical consumer durables, fans and appliances, and also pumps. Now, if you were to look at the one-year chart for the company, you would see that towards the middle of the year, the stock was on a consolidation, but since then, the upward trend has resumed. The market cap is 17,486.22 crores, which makes the company a mid-cap one. The EPS is 4.70, which again translates into a very expensive price to earnings ratio of 59.36, which is largely in line to the industry PE of 60.33. The book value is 8.60, which means that the company is available at a very expensive price to book ratio of 32.44. Return on equity is 0.6195. The promoter holding here is also on the lower side at 34.38. Now, the reason why CLSA thinks that it could go ahead and do well forward is the earnings growth sustained at over 20% given margin tailwinds and expected housing recovery is a very positive. Now, 32 times March 2019 EPS is justified, which lends the target price of rupees 310. The third company on the list is DFC Limited, which is available at 1725.20 and the target price here has been set at 1900. Now, Housing Development Finance Corporation Limited or HDFC is a holding company and the company is engaged in financing by way of loans for the purpose and purchase or construction of residential houses, commercial real estate and certain other purposes in India. Now, if you were to look at the one-year chart for the company, you would see that the company has been on a consistent uptrend. Only recently there has been some sort of a consolidation. The company is a mega cap one and the market cap is 2,75,524.33 crores. The EPS is 46.35, which translates into a price earnings ratio of 37.22. Now, this is a trailing 12 months PE ratio. The industry PE is 27.33, which means that the company is a lot more expensive compared to the industry standard. The book value is 247.93, which translates into a price to book ratio of 6.96. The debt to equity is a high number at 4.9842, whereas the return on equity is 0.1899. The promoter holding here is 0. Now, according to CLSA, this company is the best play on the housing market recovery and also its mortgage business is expected to trade an attractive 15 times March 2019 EPS, which lends a target price of rupees 1900. Now, the fourth company on the list is ICICI Bank Limited, which is available at 312.90 and the target price here has been set at 380. Now, ICICI Bank Limited is a banking company engaged in providing a range of banking and financial services, including commercial banking, retail banking, project and corporate finance, working capital finance, insurance, venture capital and private equity, also investment bankings, broking and treasury products and services. Now, if you were to see the 1 year chart for the company, you would see that it's been more of a seesaw ride, but eventually there has been some capital appreciation in the company. The market cap is close to 2,936 crores and this makes it a very large cap. The EPS is 13.35, which translates into a price to earnings ratio of 23.44, which is cheaper than the industry PE of 28.83. The book value is 150.90, which translates into a price to book ratio of 2.07. The promoter holding here is not applicable. Now, if you were to look at the reasons why CLSA chose it to be an outperformer are the NPL cycle has peaked and the resolution process should help according to CLSA, and its adjusted book at 1.8 times March 2018 looks attractive and lends credence to CLSA's target of 380. The next company on the list is Indusin Bank Limited, which is available at 1698.20 and the target here has been set at 2060. Now, Indusin Bank Limited is engaged in banking and parabanking services. The bank is involved in accepting deposits such as savings accounts, current account and fixed deposits and other banking solutions. Now, if you were to look at the 1 year chart for the company, you would see that it's been on a consistent uptrend, but recently there has been some sort of consolidation. The market cap is 101,847.06 crores, which means that the company is a large cap one. The EPS is 53.67, which translates into a price to earnings ratio of 31.64. Now, this is a bit more expensive compared to the industry PE of 28.83. The book value is 337.78, which translates into a price to book ratio of 5.03. The debt to equity is 1.4124, whereas the return on equity is 0.1614. The promoter holding here is low at 16.77. Now, the 52-week low for the company is 1036.70. Now, the rationale for investment in this company has been provided by CLSA, as this is one of the fastest and most stable growth profiles, and also the price to book of 4.3 times March 2018, although is not cheap, but the premium seems to be justified considering the company's quality. Now, this justifies the target price of 2060. Now, the next company on the list is Larsen and Toubro Limited, which is available at 1314.90 and the target price here is 1500. Now, Larsen and Toubro Limited is a technology, engineering, construction, manufacturing and financial services company. Now, if you look at the 1 year chart for the company, you would see that it was initially on an uptrend, but towards the middle of the year there was a consolidation. Recently, it has again been rising. The market cap of 184,221.65 crores makes it a large cap. The EPS is 27.90. and this translates into a price to earnings ratio of 47.13, which is much more expensive compared to the industry PE of 23.07. The book value is 290.53, which translates into a price to book of 4.53. The debt to equity is 2.1253, whereas the return on equity is 0.1383. The promoter holding here is not applicable. Now, if you were to look at the reasons for CLSA's choice, they believe that this company would be the beneficiary of government's infrastructure push, especially in the roads and urban sector. This should also benefit from recovery in the real estate sector. Now, this factors, according to them, justifies a target price of 1500. Now, the next company on the list is Mahindra and Mahindra Limited, which is available at 756.35 and the target price here has been set at 885. Now, Mahindra and Mahindra Limited is engaged in the manufacturing of passenger cars, commercial vehicles and tractors. And if you were to look at the 1 year chart for the company, you would see that even though the company had not been in a great uptrend for the entire of the year, but it has still created some money for its stakeholders. The market cap is 93,952.64 crores, which means that the company is a large cap one. The EPS is 31.68, which translates into a price to earnings ratio of 23.87. Now, this is cheaper compared to the industry PE of 33.40. The book value is 206.76, which translates into a price to book ratio of 3.66. The promoter holding here is low on 21.61. Now, if you were to look at the justifications provided by CLSA, they believe that this is going to be a beneficiary of the expected rural pickup in the economy, and also this is one of the cheapest consumption plays with a 12 to 13 times implied auto business multiple. Now, these factors in their opinion gave it justification for a target price of rupees 885. Now, the penultimate company on the list is NTPC Limited, which is available at 177.50 and the target price here has been set at 200. Now, NTPC Limited is an India-based company which is engaged in generation and sale of electricity. The principal business activity of the company is the electric power generation by coal-based thermal power plant. The company's business segments includes generation and others. The company's other business includes providing consultancy, project management and supervision. regasification, oil and gas exploration, and also coal mining. Now if you were to look at the 1 year chart, you would see that the stock has not done much for the entire year. The market cap is 1,46,356.99 crores, which means that the company is a large cap one. The EPS is 11.65, which translates into a price to earnings ratio of 15.24, which is largely in line to the industry PE of 16.48. The book value is 116.71, which translates into a price to book ratio of 1.52. The promoter holding here is decent at 62.99, and the promoter here is the Government of India. Now this company has also a very good dividend yield. Now the reasons for choosing this company are: this project is moving ahead with the project commercialization to drive a 25% CAGR in regulated equity over FY17 to FY20, and this is available at attractive valuations despite lower return on equity. Now this justifies, or this leads to a projection of a target price of rupees 200 according to CLSA. Now the last company on the list is another company where the promoters are buying, where Rakesh Jhunjhunwala has bought, and now CLSA has come ahead with a recommendation. Now Lupin Limited is available at 900.15, and the target price here has been set at 1030. Now Lupin Limited is a pharmaceutical company, and the company is engaged in producing, developing and marketing a range of branded and generic formulations, biotechnology products and active pharmaceutical ingredients across the world. Now this company has been a wealth destroyer, and only recently there has been some sort of a spike. The market cap is 40,672.21 crores, which means that the company is a large cap one. The EPS is 47.62, which translates into a price to earnings ratio of 18.90. Now this is much cheaper compared to the industry PE of 30.65. The book value is 327.11, which translates into a price to book ratio of 2.78. The debt to equity is 0.5514, whereas the return on equity is 0.1381. Now CLSA believes that early resolution of US FDA issues could lead to a re-rating, and also the implied US valuations are at distress levels and could provide the launchpad for imperative and superlative gains going forward. The target price of the company is 1030, which implies a good upside from current levels. Friends, this is all what we wanted to show you for today. Thanks for watching, and you have a good day.